Right. Okay. So focus on this, the last four parts as well. Very, I mean, like your attention in this regard is really essential because this is very important and little bit of complicated area, the impairment part when it comes to the financial instrument. Right. Okay. So what do you mean by impairment? That you know that we have done this impairment standard. Under which standard we have discussed the impairment before? Where we have discussed this impairment word before? Have you done any specific standard before? Yes. Any standard we have done in the class in relation to the impairment separately?
Case 36.
Yes, we have done the LKS 36, right? So remember, this LKS 36 impairments is for the non-financial assets like property, plant and equipment, intangible assets, which we have discussed under the LKS 36 impairment. But here we are focusing on this impairment of financial assets, like when we make any investment, like if we have invested our money in debentures, if we have invested in our money in we'll say fixed deposit, and especially when it comes to trade receivables, you know, but earlier you would have learned for your trade receivable you make a provision called bad and doubtful debt. Right, that is the provision that we made. But now you can't make a provision for the bad and doubtful debt for these trade receivables. Now you should impair this, because trade receivable is what? Trade receivable or debtor is what? It's a financial right to, or there's a contractual right to receive cash. We have sold particular good to the customer and I should receive money from him. So it's a financial asset for me, which comes under the amortized cost financial asset. Trade receivables, right? Trade receivables comes under amortized cost financial asset. So those kind of financial assets, how we should do the impairment for those kind of financial asset will be covered under this impairment part. Remember, if it is a non-financial asset, we should use LKS 36 impairment. If it is not the if it is a financial asset, right, you should use this SLFRS 9 impairment module. Now, say for an example, in a bank, they have given so many loans to customers. Their point of view, it is a financial asset. We should impair these financial assets. You know that when people taking bank loans, they are not pay the bank loan regularly and as per the contract. In that case, the bank finance companies required to make provisions in their financial statement. So where they wanted to make this provision or call the impairment under this SLFRS 9 module, right? Okay, when it comes to this impairment of financial assets part, you know that we make an impairment for the assets where we measured at the amortized cost. The reason is, you know, the fair value through profit or loss financial asset will take, if you invest in shares, your intention is to sell the shares on day-to-day basis, right? In that case, initial measurement you did on the fair value, subsequent measurement also you did at the fair value. So there, anyway, your financial asset is measured at the fair value in your financial statements, but not the case for the amortized cost. We know that amortized cost means it not at the fair value, right? So that kind of financial assets, amortized cost financial assets, are subject to this impairment, because when it comes to the fair value through OCI, fair value through profit or loss financial assets, they are anyway at their fair values. But remember, you should do impairment for the amortized cost financial assets only. There we should know debt instrument. We know the debt instrument. If there's any debt instrument measured at the amortized cost, and if there's any debt instrument measured at the fair value through OCI, those are the one we considered under the impairment. Also, we know that there's a new standard called lease receivable. These lease receivables are also subject to this impairment, and contractual assets that been SLFRS 15 revenue standard, they also you should recognize this the impairment in relation to those kind of contractual assets. So forget about the last two, SLFRS 16 and SLFRS 15. We here focus on the debt instrument measured at the amortized cost, and also the debt instrument measured at the fair value through OCI. Remember, right? Fair value through OCI debt instrument. Because can you remember when we are preparing, or when we identify the accounting treatment for that, we learned that fair value through OCI financial instruments are also partly recognized through the amortized cost model. So that purpose, we need to do the impairment for these two types of assets. And also remember, financial asset measured at the fair value through profit or loss is out of the scope. The reason is, anyway they will recognize at the fair value, and any changes the fair value has already been charged to the P&L. Clear? Right. When it comes to this impairment of the financial assets, there was a model called incurred loss model earlier. It's like this now. Say for an example, assume when we are taking a bank or a finance company, finance companies are giving loans to the customers. When finance companies are giving loans to the customers, okay, we'll say then there's one bank. That bank has given a loan to customer, and bank's point of view, that is a receivable for them. And they agreed, I mean, like both bank and the customer agreed to settle this particular loan on monthly basis. And now bank has given the loan to the customer and waiting to collect the first rental from the customer. So as agreed, the customer pay the first rental on due date. Then second month also he pays, third month also he paid, and we'll say for 6 months he continuously pay as per the agreement, or as per the due date. Properly he make the payment, right? You know now what happened, due to some financial difficulty of the customer, he is unable to pay the 7th rental. Now bank is waiting why this guy is not paying, and they still wait. Okay, we'll see whether he is going to pay this on the next week, next time, on the next due date, and they're waiting for that. And so the 8th month also the customer is unable to pay. 9th month also customer unable to pay. We try to call them, and the bank manager has called to that guy, and that guy is saying, due to this, we'll say the current situation of the country, I have no business to run the business. So therefore I may not be able to pay this loan for another 6 months. Thereafter I can pay it back, right? So now there is a doubt for the company. Look at this now. We have this amortized cost financial asset recognized in the financial statement, and this guy is not going to pay as he agreed in the contractual terms, right? So legal department will carry on whatever the legal activities, but accounts department, what they want to do, based on his payment pattern, we want to make a provision. It's like bad and doubtful debt provision. We should make a provision because he's not going to pay this money for the company or to the bank back, right? So earlier model, right? If you look at this earlier model, what earlier model says is the incurred loss model. That means bank is wait until they incurred this kind of a credit default situation. First month he is not paying, they're waiting. Second month he is paying, waiting. Third month he is not paying, waiting. And then only they identify, this customer is a troubleshooting customer, troublemaking customer. So we need to make a provision in the financial statement, because he seems to be that he's not going to pay, where we should recognize a particular provision for that. We call it that incurred loss model. Once the loss incurred, we started. When the horse gone, we close the place where it was, right? Likewise, right? the default scenario has happened, only we start the making provisions. But this was eliminated. Now under this new SLFRS 9, they have identified this expected loss model. Expected loss model means now by the time they give the loan to the customer, that means today, that customer came to my place and today I give a loan to that particular customer. Today itself I am giving the loan to that particular customer, right? Today itself I am believing this guy is also not going to be paid sometime in the future, right? Therefore what I am doing, I am making a provision today itself, right? If you see this in a if you see this in a particular this kind of a graph, you can see earlier model, that is incurred loss model. Look at this. Under the incurred loss model, we start the provision somewhere in here, right? See that this particular person, this is the provision and this is the time, right? So that guy is not paying for 1 month, 2 month, 3 month, 4 month. We'll say the time is not specifically mention it as 1 month, 2 months. So we'll say it is 1 month and 2 months he is not paying. This is the point where we start to make the provision. See, everything has incurred, right? I mean, like we have exposed to the risk already, right? Exposed to the risk. So this is the point where he start the provision. එකපාරට ඔයාලට P&L එක බැලුවොත් මේ වගේ P&L වල මුකුත් නැහැ. එකපාරට මෙතනින් තමයි ලොකු provision එකක් පටන් ගන්නේ. It's not zero. A huge provision has started somewhere in the latter part of the long period. But what happened under the expected loss model? Today itself, see, today itself we started what? Making a provision. Today itself we starting this making provision, right? And you can see there is a huge increment in the provision. But look at this blue color curve. Look at this blue color curve. This blue color curve, you can see the exponential curve pattern. Exponential curve pattern in the sense it's growing over the period of time, right? It's growing over the period of time. This exponential curve pattern you can see here because we have started his provision from the I mean like from the first day itself, day one itself, we started making the provision. So that means we ready for the future variances, we ready for the future exposures now itself. So this the current module what we are using called the expected credit loss model, we very commonly known as ECL model, right? ECL model, that is expected credit loss. What do you mean by this ECL model? Today if your customer come, or we'll say whoever, right? We'll take the basic example like when a customer comes to bank and banks gives the loans to the customer, on that day itself we starting making a provision because we know that prudence concept, right? You all have heard the prudence concept. Under the prudence concept it says that you should anticipate the future losses now itself, yeah, right? You should anticipate the future losses and accordingly you should make provisions in the financial statement, and for the you should make provision for the anticipated losses also. If you know that this kind of a loss will happen in future, now itself we making a provision rather than waiting until that default occur, right? We ready for the future now itself. So that is this ECL or the expected credit loss model. Expected, it's not incurred loss model, right? Expecting, we are expecting everybody will making losses and we are starting the provision now itself. So that is basically this ECL model says. Okay, now if you look at this credit loss model, you can see this particular credit loss model into different buckets, right? Different buckets you can see. We'll take an example like a bank loan, right? Because taking a bank loan is very easy you to understand, right? Customer comes to bank and bank gives a loan to the customer, right? So we call this the initial recognition point, the very first time when bank recognize the financial asset. How recognize the financial asset? A bank lose the cashes, so cash book credit, and they created an asset account called loan or amortized cost loan or loans and receivables. from a particular customer X. So they have this initial recognized asset in their books of accounts, right? So what we do in this first bucket itself, we make a provision. We make a provision based on the assumption that this particular person will get default in future. Now itself we make a provision, right? So then we'll say that it moves to the stage one. Stage one in the sense we'll say after 3 months. Still he makes his payment correctly. Stage one in the sense he will say he's defaulting 1 month, or now that loan has bank has given the loan, bank has granted the loan for a particular customer before 1 year. Really he has 1 or 2 month arrears, and then of course he's also again paying that back, and that is called the stage one method. He's paying that, but you know that there's a risk, but it is not a significant increase in the risk, right? The risk is there. Still you can make the provision at this point, and if that happens at the stage two in the sense your customer is not going to pay. We'll say now, have you all heard about the credit ratings? Have you all about the credit ratings? Credit ratings. Who gives credit ratings? What?
Moody's.
Yes. Moody's credit rating is one thing. Yes, that's correct. What else?
Fitch rating.
Fitch rating is a very famous one. Yes, good. Fitch rating is there. What these the rating companies do? Rating company, what is the best Fitch rating bank in Sri Lanka? The best bank in Sri Lanka who has AAA plus Fitch rating in Sri Lanka. Yes, it's not BOC, it's actually the NSB, right? NSB has AAA plus. AAA plus in the sense you don't want to worry anything, because if you deposit some money with the NSB, you know definitely you are going to receive that money, right? If you invest, when it comes to these Fitch ratings, there are different Fitch rating, right? AAA plus, then AAA, AA plus, then AA minus, then AA, then BBB plus, BBB BBB plus, BBB minus, and BBB. Likewise, CC plus, CC minus, CC. That means the credit rating is downgrading, right? If any company has credit rating of AAA, and after 6 months, if it has reduced to BBB, that means their risk has increased, right? Risk has increased because earlier they have the guarantee that they can pay the money back to the customers, but now it has reduced to BBB in the sense that guarantee has reduced now. That means the risk has increased in other terms, right? Likewise, if there's any credit risk increase, now say for an example, here we took the bank loan. Bank gives a loans to the customer, and customer regularly he pays the rental regularly, but all of a sudden we'll say after the bank given the loan on 1st January rental he pays properly, February rental he pays properly, March rental, and April rental he defaults, but in May he pays both the rentals, and again in June correctly pays, July correctly pays. So that means there's the stage one risk is there, but still there's no any significant change. And in the month of August, right, his business get bankrupt, right? So what happened? Bankrupt in the sense, and we'll say the courts declares that he's a bankrupt person. So if that is the case, significantly his risk has increased, which comes under this third stage, and also in the fourth stage, right? So likewise, there are different stages in the particular financial instrument, and according to that stages changes, we want to change the amount of the provision in the amount of the provision or the amount of the impairment we have made into the financial statement, right? Okay, we'll see one by one the next slides. Then you can identify what really this table says or this particular diagram says, right? Okay, so now we know that when we learn this LKS 36 impairment of asset standard, we learn there impairment of the normal impairment, right? Normal impairment standard. We calculate the carrying value of the asset. Also, we take the recoverable value of the asset. The difference we charge to the P&L. That is the basis where we use for the non-financial assets. So how we should make impairment to the financial assets, right? How we should make this thing in the financial assets. Right, to the financial assets, right? How we should do that? How we should do the financial asset? How we should do the impairment on the financial asset? That is the question. Impairment on what? Look at this. SLFRS 9 says you should do the impairment on the expected credit loss. Expected credit loss. It's not the credit loss. It's expected credit loss. Okay. First of all, we'll look at what do you mean by this expected credit loss. But before that, we'll see what is this credit loss. Rather than recognizing the expected credit loss, we'll see what is the credit loss. Right? Okay. Credit loss mean the difference between the contractual cash flows and actual cash flows discounted by the original defective interest rate. It's like this. You go to bank, right? Okay, you go to bank, you take the bank loan, and bank's point of view, it is an amortized cost financial asset for them, right? And according to the contract, you need to pay 100,000 in each year over the period of 5 years. First year you need to pay 100,000, second year you need to pay 100,000, third year, fourth year and fifth year you need to pay 100,000 as the renter. Those are the contractual cash flows. As per the contract, these are the cash flows that you need to pay. Second thing, you are taking what are the actual cash flows. First year, I should pay 100,000, but I have paid only 50,000. Second year, I have to pay according to the contract 100,000, but actually I have paid 75,000. So I am taking contractual cash flows and I am taking what are the expected cash flows. Now the matter comes because we learned that this model is called the expected credit loss model. It's like this. Now how this happened after the introduction of this SLFRS 9 module, all the banks, right, we'll say there's only one customer in the one bank. Right? There is only one customer in the bank and the bank has given only one loan. Now what happened is how to measure this. That is our issue now, because we know if it is a property, plant and equipment, we can take the carrying value, we can take the recoverable value, and we can compare whether there's an impairment. Likewise, here also we are going to calculate it. Only problem is this is something not incurred, expected. On expected basis, we need to calculate this provision. Understood? We need to calculate this provision on the expected basis. We are expecting this this much will be default, right? So there should be some basis for that. So now in the example which we took, bank is given a loan, right? And bank manager, he knows the person well. Business everything he knows. So bank manager himself, he knows that now he's supposed to pay 100,000 over the period of 5 years. Those are the contractual cash flows. That bank manager assumes he will pay 100,000 in the first year, and then අපි මේ ඉන්න සිටුේෂන් එකේ බලමුකෝ. දැන් ඔන්න අපි දන්නවා කොරෝනා හින්දා අපි හිතමු මේ මිනිස්සයා මොනවද ගාමන්ට් එකක් කරේ කියලා. ඒ කියන්නේ රෙදි විකුණපු ෂොප් එකක් කියලා. අපි එහෙම කෙනෙකුට තමයි ලෝන් එක දීලා තියෙන්නේ. දැන් දන්නවා මේ දවස්වල බිස්නස් නැහැ. එතකොට කලෙක්ට් කරගන්න විදිහක් නැහැ. එහෙනම් මම ෂුවර් එකටම දන්නවා. තව අවුරුදු දෙකක්වත් යනකම් 100,000 කලෙක්ට් කරගන්න බැරි වෙයි. Thereafter I may collect 50,000. අන්නේම I am predicting what are going to be my future cash flows which I am going to collect from the customer. That does හරිද? ඒක කරනවා. හැම බැංකුවක්ම එයාලගේ කස්ටමර් හැමෝටම මෙහෙම හිතනවා. But I will tell in the practical side. කස්ටමර් දැන් BOC එකට People's Bank එකට මේ හදන්න ගියොත් එහෙම අවුරුදු දෙක තුනක් විතරයි එක අවුරුද්දක වැඩ ටික ඉවර කරගන්න නේ. Therefore we have some particular modules for that. But remember, but for selecting customers they do that. Material customers ලා ඉන්නවා billion ගණන් loans ගත්ත අයට ඒගොල්ලෝ මේවා individually හදනවා. මොකද කරන්නේ? They are taking the contractual cash flows කොච්චරද contract එකේ විදිහට ගෙවන්න ඕනේ, and they are also taking what are the possible cash flows, right? Expected cash flows they are going to collect in the future. හරිද? ඊට පස්සේ මේක ඒගොල්ලෝ මොකද කරන්නේ? මේක discount කරනවා. මේක මේ දෙක අතර තියෙන difference එක discount කරලා ඒකේ present value එකක් ගන්නවා. හරිද? අන්න ඒකට තමයි මේ credit loss එක කියලා කියන්නේ. Remember on what we should make the provision on the expected credit loss, but we are not worried about the expected credit loss for now. We are worried about this credit loss right now. What do you mean by this credit loss? Credit loss එක කියලා කියන්නේ difference between contractual cash flows and all the cash flows that entity expect to receive discounted at the original effective interest rate. චුට්ටක් ඔක තේරෙන්නේ නැති හින්දා අපි මොකද කරන්නේ? අපි මේ question එක බලනවා. Right. We'll see this question. On 1st January 2018, Naval purchased a bond. Purchase a bond කියන්නේ I have invested in a bond. Right? So it seems to be a debt instrument on rupees 1 million, which is measured at the amortized cost. Clearly says this is amortized cost financial asset. So I know that is what I can, the amortized cost financial assets only I can make provision against, right? Interest is 10%, payable in arrears, arrears in the sense at the end of the each year. Repayment is due on 31st December 2021. That is 4-year instrument, asset for me. Effective interest rate is also 10%. Look at this. Interest is 10%. Nominal interest rate is also 10%. Effective interest rate is also 10%, right? Okay, we'll see about that sort of a factor as well. Hope you can see my entire screen right now, where you can see the Excel sheet which I have shared. Can somebody confirm whether you can see this? Yes?
Yes, sir.
Right. Okay. Now, when you look at this question, you can see there are the loan is for we have done this investment for period of 4 years, right? We have done this for a period of 4 years. Right, we have done this for a period of 4 years, right? 4 years. Right. Done, right? So this is for the period of 4 years. You know how to get the how to initially you should measure at the fair value. Fair value is, you see, the purchase a bond for 1 million, that is their fair value. So you can take the amortized cost at the beginning of the year, amortized cost at the beginning of the year, then you recognize the interest using the effective interest rate. Then now here the case is the effective interest rate is also 10%, and you receive the interest received also at 10%, and you can take the amortized cost at the end of the period. Amortized cost at the end of the period, right? So I'll make them wrap so you can see. Good, right? So now you have this opening balance, which is 1 million, right? So you should recognize the interest based on the effective interest rates. Effective interest rate is how much? 10% into 10. This is the effective interest rate. Also, you're receiving the cash at what rate? The 10%. That is also on the nominal price. That means you are getting how much? 100,000. So your amortized cost at the end of the year will be how? The opening balance plus amortized cost minus the closing balance. That is also 1 million. The reason is here, there's a learning point. Our effective interest rate is also 10%. A nominal interest rate is also 10%, which means all the time your starting value will be carried forward over the period of 4, right? So you can see it when you take this for the next financial years also. You can see that all the time the balance will be 1 million, the amortized cost, right? So this is the contractual cash flows. You can see these are the contractual cash flows, right? Okay, so we learned one important point also. With the effective interest rate and the nominal interest are same, opening amortized cost will be the closing amortized, right? Okay, so what happened? Look at this, what happened. On 31st December 2018, Naval received interest of 100,000, right? If default occurs, remember, why always remember we prepare this impairment on the basis that if, why it is expected. If default occurs within the next 12 months, then Naval or NAPA, right? Naval, it should be Naval, estimate that no further interest will be received and only 50% of the capital will be repaid on 31st December 2020. Contractually, how much we should receive? Contract ki vidita apne kochara hambenne onda. First year we should receive 100,000. Second year we should receive 100,000. Third year we should receive 100,000. Fourth year we should receive 100,000, and the fourth year you should receive your capital investment also. These are the contractual cash flows. But what they expect, now they have actually received this 100,000, right? They have actually received this 100,000. If default occurs within the next 12 months, NAPA or the Naval estimate that no further interest will be received. So he assumed if default happens, I am not going to receive, right? If default happen, I am not going to receive these cash flows. I'm not going to receive the future interest. Also, I will be receiving only 50% of the capital which I invested, right? That means I am going to receive only 50% of the capital what I issued, right? So you can identify here what are the, now can you come back to this this formula? Now you know what are the contractual cash flows and what are the all cash flow that entity expect to receive. Clear, right? So those you know now, right? So you can see these are the contractual cash flows. First year we should receive 100,000. Second year we should receive 100,000. Is it 3 years? Yes. Okay. Anyway, don't forget about the years right here. It should be, is it 2018, 2019 and 2020? Yes. Should be 3. All the case it has wrong. Sorry for that, right? So it's 2020 December, right? So yes, 2020 December, right? So remember the contractual cash flows in the first year, it is 100,000 we are going to receive as per the contract. Second year I should get 100,000. Third year I should get 100,000 plus the initial investment which I made. But these are what? The contractual cash flows. What we expect under the actual cash flows. I expect that first year I will receive, okay. Second year I am not going to receive interest. Third year I am not going to receive the interest plus third year I am only going to receive 500,000, which is 50% of my capital investment. Clear? So standard C, get this difference take the actual cash flows, take the contractual cash flows like here, and take what are the cash flows you expect, get the difference, right? What do you want to do? You can take this difference as the credit loss. First year there is no credit loss. The reason is first year you expect 100,000 to receive and you actually receive 100,000, nothing, lose. Second year you expect, as per the contract, you should receive 100,000, but you are not receiving the 100,000, which means your credit loss is 100,000 first year. Second year. Third year, you are supposed to get interest of 100,000 and the capital of 1 million, but you actually expect to receive only 500,000 out of this capital. That means we are not going to receive 100,000 interest. Also, we are not going to receive 500,000 capital we expect. Understood? So this is called the credit loss. Can you remember the word right now? Now, are you clear? What do you mean by this credit loss? You're taking contractual cash flows. You're taking all the cash flows that our entity expect to receive. This has to be discounted using the original effective interest rate in this case, right? In this case, look at this. You take these cash flows. These are the credit losses, right? These are the credit loss cash flows. See, credit loss. We are not going. There's no credit loss in the first year. There is no credit loss in the first year. Second year, we are not going to receive 100,000. Third year, we are not going to receive 500,000, right? Now, if you look at here, then on api gatat මෙන්න මේ වගේ මේක නම් අපේ financial period එක. This is year 0. This is year 1, right? This is year 2, and this is year 3, right? So this is the initial recognition, and we recognize our financial asset at the end of the first year. මේ දවසට කොච්චරයිද value එක instrument එකේ? It's 3 years now. හරි? It's 3 years, isn't it? Yes, it's 3 years. හරිද? කොච්චරයිද මේ පළවෙනි දවසේ ඉවර වෙද්දි value එක? It should be 1 million because effective interest rate and the actual interest rate both are same. So at the end of the first year, my balance should be 1 million. This point. Now this is the point where I assess my impairment. මේ දවසේදී තමයි මම impairment එක කරන්නේ. එතකොට මම දන්නවා impairment එකේ future cash flows මට හම්බෙන්නේ නැහැ. What are the future cash flows that I am going to receive? In the next year, I am not going to receive 100,000. Third year, I am not going to receive 600,000. Then mama inne koheda me? Then mama inne koheda, right? Again, 0 is the day where we give the loan, and at the end of the first year, my asset value or my instrument value is 1 million. I am not going to receive 100,000 rupee value here. නේද? මෙතනට මට interest එක හම්බෙන්නේ නැහැ first year එකේ 100,000. In the second year, I am not going to receive 600,000, isn't it? Clear නේද? චුට්ටක් just assume that this is the figures, right? So I am here today. දැන් මෙතන ඉඳලා බලද්දි look at this. I am here today. මම අද මෙතනනේ ඉන්නේ. මෙතන ඉඳලා බලද්දි 1 year එකකින් මට 100,000 හම්බෙන්නේ නේ. 600,000 හම්බෙන්නේ 2 years වලින් because I am at the end of the first year. Correct? So what I am doing is I am using the original effective interest rate. What is my original effective interest rate? 10%. Using the effective interest rate, I am getting the present value of these future cash flows. I mean, like, I am not going to receive 100,000 in 1 year's time. I am not going to receive another 100,000 in 2 years' time. Also, I am not going to receive another 500,000 another 2 years' time. So this is the amount which I am going to, which I believe that this is the possibility of having the credit loss. Understood? Right? Look at this. I am going back to this slide again. We are talking about impairment of the credit loss. How to calculate the credit loss? You want to take what are the contractual cash flows. You want to take what are the actual expected cash flows. Those cash flows, that difference you need to discount using the original effective interest rate, which we have done here. So here we identify what are the contractual cash flows. Then we identify what are the actual cash flows here, or what are the actual cash flows we are going to receive over the next 2 period. and these are the credit loss which I am expecting. And what I did, I got the present value of these cash flows using what? The original effective interest rate. Remember, right? Now, by the time when I'm taking the loan, the effective interest rate is 10%. It may be changed at the first year, maybe second year and the third year. But don't use any other market rates which prevail in these years. Always to discount, you want to use the original effective interest rate. Right? So this is called the credit loss. Again, I'm going to my previous. On what financial instrument or the impairment is charged? On the expected credit loss, not on the loss. Not on the credit loss. What here we calculated the credit loss, not the expected credit loss. Here we calculate the credit loss, right? How we got the credit loss is now clear to you all. This is the credit loss. Now, as I told, we should make the impairment on the expected credit loss, right? Okay. To do that, I'm little bit adding some other part to this this question, right? The same question, you can see the same question in the first paragraph and the second paragraph, and I have done one more additional line item to this question. What is it? It is estimated that, look at this, probability of default on the bond within the next 12 months will be 0.5%. Now the question says, මේම expected loss එකක් වෙන්න පුළුවන්. Yes. හැබැයි මේකට වෙන්න තියෙන probability එක කොච්චරයිද? 0.5%. Right? So what I should do, I should take this credit loss and apply this 0.5% probability, which means I should make a provision of 2,934 rupees as the impairment. Understood? What should I do? I am taking the contractual cash flows. I am taking the actual expected cash flows. That difference I am discounting using the original effective interest rate. And I should apply what is the probability of having this kind of a situation. Understood? That is what we call this expected credit loss. And accordingly, you can put this double entry. You can recognize this 2,934 as an expense in the P&L, and which you can credit to the financial asset account. Understood? Right? This is how you want to measure the impairment on amortized cost financial asset. What you want to do? You want to take the contractual cash flows. You want to take what are the expected cash flows and take the difference, right? That difference you should discounted by the original effective interest rate, and you want to apply the probability of having this, which is 5. So here is the way that you wanted to recognize the impairment. Okay. Now you can see some of the definition. Now we know the story. Now we can easily understand what are the definition. Credit loss. You know what is credit loss right now? The difference between all contractual cash flows that are due to an entity in accordance with the contract and all cash flows that entity expect to receive discounted at original effective interest rate. Keep this thing very you should keep these important points in your mind. Keep that in your memory. The reason is, at the examination, sometime you will get market rate of interest at each year end, where quickly you feel to apply that market rate. But that is not the case. All the time you should apply the effective original interest rate to this calculation. Right? Okay. What do you mean by expected credit loss? The weighted average of the credit loss with respective risk of default occurring as the weights. That means you want to implement the probability into this. හරිද? ඔන්න දැන් තමයි තව පොඩි ප්‍රශ්න. දැන් අපි දන්නවනේ මොකක්ද credit loss කියන්නේ, මොකක්ද expected credit loss කියන්නේ. We have an idea about that now. How we should do the impairment. Now when it comes to this impairment, right? When it comes to this impairment, okay, when it comes to this impairment, there are two impairment called the 12-month expected credit losses and the lifetime expected credit losses. හරිද? ඒ කියන්නේ මෙහෙමයි. ඔයාලට මතකද මෙන්න මේ point එකේදී අපි ඉගෙන ගත්ත මෙන්න මේ buckets ටික, right? මෙන්න මේ buckets ටික මතක තියාගත්තනේ. The impairment එක, right? When it comes to this impairment, we'll see, I think that should be on a different slide if I am correct. Right, yes. That will do little later, right? I think that is essential for your, right? For the time being, we'll forget about this 12 months and the lifetime, right? Forget about that. So you know the basics now, how you should make the provision in the financial statement. Now remember, when you're measuring this expected loss, then ඔයාලා මෙතන මේ question එකේ අපි ඉගෙන ගත්ත නේද? මෙන්න මේ කැලල. මෙන්න මේ ටික. Probability of default 0.5 කියලා. දැන් මේ ටික නම් හදාගන්න අපිට ලේසි. මොකද අපි කරන්න ඕනේ? මේකේ මොකද කරන්න ඕනේ? දැන් ඔයා හිතන්න ඔයා තමයි මේ කම්පැනි එකේ ඉන්න accountant. හරිද? That is Naval කියන කම්පැනි එකේ ඉන්න accountant තමයි ඔයා. You should make a provision for your ඔයාගේ amortized cost financial asset තියෙනවා නම් අනිවාර්යෙන් provision එකක් කරන්න ඕනි. You should make. දැන් ඔයාලගේ සාපඩෙන් ඔයාලා දන්නවනේ ඔයාලා වැඩ කරන buying and selling companies තියෙන. ඒකක වැඩ කරොත් trade receivable වලට අපි දානවා bad debt provision එකක්. ඒ වගේ දැන් bad debt provision කියලා කතාවක් නැහැ. දැන් තියෙන මොනවද? impairment. එහෙනම් ඔයා company accountant විදිහට වැඩ කරනවා නම් ඔය trade receivable වලට impairment එකක් කරන්නම ඕනි. impairment එකක්. ඉස්සරනේ අපි කරේ provision for bad and doubtful debt. Now it is not there. Below the trade receivable you should write impairment provision. It's not the bad and doubtful debt now, right? Impairment provision. So as the accountant you should do this. And on the other thing, now here also you are the accountant. Then we are accountant විදියට ඔයා දන්නවා you are the accountant of this naval company. ඔයාලා 1 million දීලා bond එකක් purchase කරලා and you are keeping this until it get mature. So you obviously you know this is the amortized cost debt financial asset. අනිවාර්යෙන් impairment කරන්න ඕනේ. You should do that impairment. When you do the impairment, these are very easy to take. නේ ඔයා දන්නවනේ අනිවාර්යෙන් interest එක කොච්චරක් හම්බෙන්න ඕනේද අවුරුද්දට. ඒ වගේ අවුරුදු 3ට කොච්චරක් interest හම්බෙන්න ඕනේද capital එක maturity එකේද කීයක් හම්බෙන්න. That you know the contractual cash flow. This of course you can predict. මේවා ඉතින් ඔයාට predict කරන්න තමයි තියෙන්නේ. predict කරද්දී ඔයාට මොකක් හරි model එකක් හරි මොනවා හරි තියෙන්න ඕනේ. නැත්නම් ඉතින් කොහොමද predict කරන්නේ නේද? predict නැත්නම් ඔයාට predict කරන්න පුළුවන් මේක impairment නැහැ කියලා. But it has to be a realistic estimate behind this. When you take this, හරි අපි කියමුකෝ කොහොම හරි අපි estimate කරගත්තා what are the future cash flows කියලා. Right. Okay. Then you can calculate this the credit loss. Right, you can calculate the credit loss. What you want to do, you should calculate the credit loss by discounting the original effective interest rate. ඒකත් ඔයා දන්නවා. Original effective interest rate එකත් ඔයා ගාව තියෙනවා. You can calculate the expected loss. The next question is how to calculate this probability of 0.5. මම කොහොමද කියන්නේ මේක වෙන්න තියෙන probability එක 0.5 කියලා. Probability, how can I tell that the probability of having this is 0.5? Yes, there are lots of models to do that. හරිද? දැන් ඒ කියන්නේ banks and finance companies ඉන්නවා නේද පුතා? Banks and finance companies වගේ ගොඩක් ඒගොල්ලෝ කරන්නේ models use කරනවා. හරිද? model use කරනවා කියලා කියන්නේ දැන් ඔයාලා අහලා ඇති නේද අර ඒ කියන්නේ model එකක් use කරනවා කියලා කියන්නේ there are some models. හරිද? මේවට තියෙනවා වෙනම models. Even all the audit firms have their own modules, right? EY has the EY model, KPMG has their KPMG model, PwC have the PwC model, and Deloitte have their Deloitte's model, right? Likewise, they have their own modules which they produce. Those are purely statistical, or the what do you call the derived based on the statistical modules. ඒගොල්ලෝ calculate කරනවා. probability theories තියෙන්නේ දන්නවනේ නේ. I'm not going to tell those kind of things. So here you want to consider this probability of the default. ඒ කියන්නේ හරියට මෙහෙම කරනවා. ගොඩාක් වෙලාවට අපි දැන් loans ගත්තොත් අපි හිතමුකෝ අපිට බෑග් එකක් තියෙනවා මේ බැංක් එකේ ඉන්නේ කස්ටමර්ස්ලා 10 දෙනෙක් කියලා. මේ 10 දෙනාගේ පැටර්න් එක බලනවා. අපි කියනවා 10 දෙනෙක් loans ගත්ත දෙන්නෙක් ගෙවන්නේ නැහැ. Probabilities will say 20%, 0.2. 0.2, right? 20%. හරිද? එහෙම නැත්නම් අපි කියනවා there are we'll say 1 million customers, out of that 5 people are not going to pay. So we can calculate that as the probability. What is the probability, right? Likewise, we calculate probability of the default. Probability of default. We calculate it, right? Probability of default is something that we need to calculate. ඒක හරි very famous as PD. PD එක කියලා කියන්නේ probability. මේවා මොනවද මේ statistical modules. එතකොට දැන් accountants ලා විදිහට මේවා අපි හදා ගන්න ඕනේ. accountant specialist ලා තමයි මේවා හදලා දෙන්නේ. දැන් අපි හිතමුකෝ ඔයාලා මොකක් හරි යුනිවර්සිටි එකක දැන් ඔය chartered කරන ගමන් යුනිවර්සිටි එක statute කරනවා නම් yes you can learn this kind of how to develop this kind of a model. හොඳට stats ටික හරියට අල්ලගත්තා නම් you can know you can develop your own modules to this even. ඒක realistic model එකක් වෙන්න ඕනේ. Right? So probability of default you can calculate. අපි හිතමුකෝම අපි percentage එකකින් හරි බලලා අපි බලනවා probability. How much what is the probability? දැන් අපේ දැන් මේ දවස්වල කොරෝනා වලට කරන්නේ නේ probability. අපි sample එකක් අරගෙනනේ පහුගිය දවස්වල ටික කරේ 100 sample එකක් අරගෙන බලනවා 35. ඊට පස්සේ ඒගොල්ලෝ එක බලනවා 100 එකට 35 කියලා කියන්නේ ලංකාවේ population එකෙන් කීයකට තියෙන්න පුළුවන්ද probability of default. ඒ වගේ මේ වගේ default වෙන්න තියෙන probability එක කොච්චරද PD. Then forecasted economic loss if default happens in period. Right? What is that? The loss given default කියලා කියන්නේ. ඒකට මෙහෙම වෙන්නත් පුළුවන් නේ. customer කෙනෙක් default වෙනවා. customer කෙනෙක් default වෙනවා. ඒ කියන්නේ ගෙවන්න බැරි වෙනවා. හැබැයි මනස ආයි ගෙවන්න පුළුවන්. එහෙම පුළුවන් නේ. දැන් අපි හිතමු මේ corona period එකේ customer කෙනෙකුට ගෙවා ගන්න බැලුවා. එයා default වෙනවා. ගෙවා ගන්න බැරි වෙනවා. හැබැයි default වෙච්ච හැමෝම ගෙවන්නේ නැතුව නෑ. They are paying back. loss වෙච්ච කෙනෙක් again ගෙවන්න පුළුවන්. default වෙච්ච කෙනෙක් ගෙවන්න පුළුවන්. we call loss given default. ඒ කියන්නේ අපි බලනවා මෙතනදී ඒ වගේ loss ගියපු කෙනෙක් ඉන්නේ. ඒව defaultම වෙන්න තියෙන probability එක කොච්චරයි? සමහරවිට some customers may not paying default වෙනවා. default වල recover වෙන්නත් පුළුවන්. if there is the case no worries. සමහර customers ලා default වල defaultම තමයි. එන්නෙම නෑ ආයි. අන්න ඒවට තමයි කියන්න පුතාම loss given default LGD. when one of your customer got default දැන් අපි හිතමුකෝ අපි trade receivable කෙනෙක් කියලා trade receivable කෙනෙක් default වුණොත් billing අල්ලලා අපි කොහමද යාගේ recoveries ටික කරගන්නවනේ අන්න එහෙම නැතුව lossම වෙලා යන්න තියෙන එක තමයි අපි මේ කියන්නේ loss given default once a customer got default the probability of making him as a loss client called loss given default. Right? There's another one called discounting factors. This will happen in the future. So obviously the discounting factor impact also need to be considered. And the other thing is that based on the assumption or based on some information about the past event, then මේ වගේ දේවල් ගන්නකොට these are statistical modules. No, these are statistical modules. එතකොට අපි ගොඩක් වෙලාවට මේවට economic factors උත් ගන්නවා. Economic factors කියලා කියන්නේ the inflation rate of the country. Interest rate of the country, then economic growth of the country. We'll say what are the other macroeconomic factors, you know. Those factors also we inbuilt into this probability. මතකයි නේ දැන් අපි මේ කරන්නේ මොකක්ද දන්නවද මෙන්න මේ 0.5 කියලා අපි හොයාගත්තනේ මෙතනට තියනවා කියලා risk එක මේ probability අපි 0.5 හොයන්නේ කොහොමද? ඒකට තමයි මෙන්න මේ modules තියෙන්නේ. consider කරත් 0.5 හදාගන්න තමයි අපි මේ යන්නේ. So that you can calculate the probability you can calculate by PD multiply by LGD multiply by EFA and everything have to be discounted to get the present value. So technically PD into LGD into EFA කොහේ ලියලා තියාගන්න. ECL එක වට හදන්න පුළුවන් PD that is probability of default multiply by LGD that is loss given default multiply by EFA. සමහරවිට ඔයාලගේ exam එකේදී දෙන්නේ LGD විතරයි PD විතරයි. possibility EFA එකකුත් આવොත් EFA එකක් දාලා හදාගන්න තමයි තියෙන්නේ. There is one question, don't worry. This is how we measuring this probability expected loss. Any doubt up to this point you all have? we'll see. I will. We'll see about this. We'll see this question number 13. Okay, read the question number 13 first. Yes, candy stores made a loan to another entity. So they have made a loan, which means their point of view, it's a financial asset. On 1st January 2018. Its accounting year end is 31st December. The following information relates to the loan. So you can see in 2018 31st December, present value of these contractual cash flows is 85 and present value of the expected cash flow probability is 85 ම හම්බෙන්න තියෙන probability එක 86%. 80 million හම්බෙන්න තියෙන probability එක 10%. And 70 million හම්බෙන්න තියෙන probability එක 4%. These are 2018, right? So you can see the present value of cash flows and these are present value of expected cash flows and the probabilities. Right? We know what do you mean by the credit loss. Credit loss is the difference between the contractual cash flows as well as the expected cash flows multiplied by the probabilities. So here they have calculated already this present value of the cash flows separately given, and present value of expected cash flows is also given. Already they have discounted it. No need to discount it using again by the effective interest rate, isn't it? Right? Probabilities provided are the probabilities of stated that the cash flows resulting from default within 12 months. ඒක තාම තේරෙන්නේ නැහැනේ. අපි බලමු මෙයාට කොච්චර provision එකක් කරන්න ඕනේද කියලා. Look at this. Right? If we assume that at the beginning of the 1st January 2018, you're like, we'll say there's a 90% chance, 98% chance to receive the 90. Look at this. Your present value of the cash flow is 90. මේ තියෙන contractual cash flow. Contractual cash flow is 90. Actual cash flow is also 90. Probability of having this is 98. So there is no risk. That's why here the risk has considered as 0. But remember, there's 2% probability to receive 85, not 90, 85. So there is 5 million rupees. 5 million rupees. There is a chance of not getting this 5 million rupees, because contractual cash flow is 90, actual cash flow is 85. We are expecting to receive. So we are going to lose 5 million. Probability of having that is 2%. That means we are going to lose 0.1 billion. So this is the impairment loss you should recognize. What will happen at the end of the period? Now, මේක තමයි impairment එක කියලා කියන්නේ. මෙයාට අපි double entry එකක් දානවා. How you should put the double entry? You debit profit or loss 0.1 and credit either asset account or provision account 0.1. නේද? කොහොමද ඔයාලට double entry එක දාන්න පුළුවන් මේකට දානවා නම් you charge or you debit PNL 0.1, you debit PNL 0.1, right? You debit PNL 0.1. Either you can credit this to provision account or to the amortized cost at asset itself. Right? You can credit that you can credit to the amortized cost financial asset. Right? You can credit that to the amortized cost financial asset 0.1. This is how you want to put the double entry. ඒ කියන්නේ දැන් ඔයගේ provision account එක අරගෙන බැලුවොත් in your provision account you have 0.1 million provision in the provision account. So what happened in the second year? Second year එකේ කියනවා present value of our contractual cash flow is 85. There's a 86% chance to receive 85, which means there's no risk. But to receive 80 million, which means we are going to lose 5 million cash, and the probability of having that is 10%. So 0.5. And there's a probability of getting only 70, which means I am going to lose 15 million. Sorry, this 85 to 70. Sorry, 5 million. Sorry, 85 to 70. Yeah, මෙන්න මේක. ඒ කියන්නේ 85 ඉඳලා 85 වෙන්න හම්බෙන්න තියෙන probability 86%. That means there is no risk. Right? 85 to 80. ඒ කියන්නේ losing 5 million. Loss of 5 million. There is a probability of loss using 5 million, which is 10%. So which I have taken that 5 million into 10%, that is 5%. Next one, 85 into 7, that is how much? 15 million. Loss is 15 million. 15 million into 0.4% in the sense 0.6. There's a probability of having that 15 million. No? It's not 5. 15 million. So how much is that total? It's 1.1 million. The required provision is 1.1. Last year we have, or at the beginning of the year, we have make a provision of 0.1 already. That means additionally, I should do another 1 million provision in the financial statements. The reason is because in the first year, I have make a provision of 1 million. Again, I wanted to do 1.1. Already I have done 0.1 million. Here I need to do only for the balance 1 million provision in the financial statement. This is called the impairment. Understood? Right. Next one. Here we are talking some other another important point. So probably this or not. This no won't be the last part. There's very small part. Then we done with the impairment, right? Okay. Remember this one. Significant increase in credit risk. What do you mean by this? Significant increase in credit risk. It's like this. Now there's a person, right? This is the date that we grant the loan to this particular person, and this is our reporting date. All right. This is the person. He came to our company, and we pay him. We gave him a loan, granted a loan, right? But by that date, look at this, right? By that date, he has a credit rating of AA. හොඳට AA credit rating තියෙන කෙනෙකුට තමයි අපි මේ loan එක දුන්නේ. කවදද grant කරපු දවසේ initial recognition එකේ. Right? Now we know that මං ඔයාලට කිව්වනේ. Now we prepare the impairment based on the expected credit loss. So bank will make a provision in the financial statement on this grant date itself, assuming this guy is going to be default in future. Harida? Hari. But what happened at the reporting date? He's having lots of issues, and his credit rating is now downgraded to BB. What happened? The credit rating was AA by the time we grant the loan. As at the reporting date, his credit rating has dropped down to BB. Which means what happened to his credit risk? His credit risk has increased significantly. We assume that it has increased significantly. Credit risk එක කියන්නේ මේ මනුස්සයා ගෙවන්න නැති වෙයි කියන risk එක. Risk of default. That is called the credit risk. So this credit risk increase significantly. Why we call it significantly? The reason is normally then ඔයාලට බලයි මේක කොහොමද significant කියන්නේ කියලා, because normally මෙහෙම notch එකක් down වෙන එක, notch එකක් නෙමෙයි, මෙතන notch 4ක් විතර බහැලා තියෙන්නේ. ඒ කියන්නේ double A තියෙන කෙනෙකුට ඊට පස්සේ හම්බෙන්න ඕනේ A+, ඊට පස්සේ A-, ඊට පස්සේ A, ඊට පස්සේ triple B, ඊට පස්සේ triple B+, triple B-, ඊට පස්සේ triple B, then double B+, double B- and double B. ඒක ගොඩාක් මෙයා drop වෙලා. ඒ කියන්නේ මෙයාගේ credit risk එකේ ලොකු issue එකක් තියෙන්න ඇති. That's why we call this, it's as the significant increase in the credit risk. Right? So standards say to assess whether there has been a significant increase in the credit risk, SLFRS 9 requires entity to compare the asset's risk of default at the reporting date with its risk of default at the date of initial recognition. Initial recognition කරපු දවසේ reporting date එකේ දෙකේම මෙයාගේ credit risk එක ගෙවන්න තියෙන risk එක check කරලා බලන්න. So credit rating is a good way you to measure the credit risk. So here you can see this guy had a good credit rating at the beginning of the period, but currently he has very like significantly his credit risk has increased now. හරිද? අන්න ඒ වගේ වෙලාවකදී ස්ටෑන්ඩඩ් එක කියනවා එයාට ප්‍රොවිෂන් එක පොඩ්ඩක් කරලා හරියන්නේ නැහැ. You want to make a significant increase in the credit risk, so you should improve his provision. Then ආයි මං කිව්වේ අපි පොඩ්ඩක් මේ diagram එක ආයි බලමු කියලා. This is the point. Look at this. What happened? මෙයාට loan එක දීපු point එක තියනවානේ. මෙන්න මේ මනුස්සයාට අපි loan එක දුන්න point එක තියනවානේ. මෙන්න මේ දුන්න මං කිව්වේ we make the provision based on the expected credit loss. ඒ හින්දා loan එක දුන්නේ අද නම් what I am doing today itself I am making a provision. ඒ හින්දා standard එක කියනවා loan එක දීපු දවස තියනවානේ. okay. මේ දවසටම ඔයා මෙයාට provision එකක් කරන්න. අපි ඒකට කියනවා පුතා 12 months expected credit loss. What do you mean by this 12 months? 12 months කියලා කියන්නේ මෙහෙමයි. මෙයාගේ ප්‍රශ්නයක් නෑ ඒ වුණාට අපි provision එකක් කරනවා. අන්න ඒක තමයි මේ 12 months කියලා කියන්නේ. 12 months කියන්නේ short period නේ. අපි මෙයාට අර ටිකක් දාන්න ඕනේ නේ provision එකක්. ඒඳ අපි පොඩි provision එකක් දානවා. So we call it 12 months expected credit loss. We call it 12 months expected credit loss. හැබැයි stage 1 එකට එද්දි stage එක 1 එකට එනවා කියන්නේ පුතා මෙහෙමයි. මෙයාගේ credit risk එක චුට්ටක් වැඩි වෙලා because we know that මෙයාගේ credit risk එක ටිකක් වැඩි වෙලා. මෙන්න මෙතන මම කියන්නේ. මෙතන ඉඳලා මෙතනට යනකොට මෙයාගේ risk එක පොඩ්ඩක් වැඩි වෙලා. ඒත් ලොකුවට නෑ. එහෙම කියනවා 12 months මේ ඉන්නකො කමන්නේ stage 1 එකට ආවත් stage 1 එකට ආවත් recognize 12 months expected credit අවුලක් නැහැ shape එකේ තියාගෙන ඉන්න. But look at this place. Stage 1 and stage 2. Credit risk not increase significantly, but what happened here? The credit risk increased significantly. Ara ape isala picture ke ara double B une credit rating එක. His credit risk increased significantly. His credit risk increase. Standard එක කියනවා මේ එහෙමනම් පුතෝ 12 months මදි. You should start making lifetime expected credit losses. මදි 12 months දාලා හරියන්නේ lifetime expected. හොන්දට provision කරන්න මදි 12 months දාලා මදි. Make lifetime expected credit loss. Right? And also if there's any objective evidence of impairment, ඒ කියන්නේ හොඳටම තේරෙනවා නම් bank එක මේ කවුද court එකෙන් කියනවා මේ මනුස්සයා bankrupt. Significant I mean like objective evidence එකක්ම තියෙනවා. මෙයාට මේ court එකෙන් කියලා තියෙනවා he is a bankrupt person. You should make full provision. Lifetime expected credit provision එකක් මෙයාට provide කරන්න. Understood? So remember there are two types of provision that we can do. One we call the 12 months expected credit loss. If particular person's risk of default has increased significantly, then we should not limit our provision to the 12 months expected credit loss. It has to be increased to lifetime expected credit loss. Right? Okay. So these are not much important, but remember there's a rebuttable presumption. I think we have learned this rebuttable presumption word earlier also. Rebuttable presumption that entities that credit risk has increased significantly when contractual payments are more than 30 days past due. සාමාන්‍ය දැන් ඕක හරි වදයක් ටි කොහොමද මේ හොයන්නේ මේක significant increase. දැන් අපි මේම හිතන්නකො බැංක් එකක් තියෙනවා. බැංක් එකේ කස්ටමර්ස්ලා 100ක් ඉන්න. ඔය 100ටම ක්‍රෙඩිට් රේටින් තියනවාද ෆිච් රේටින් නෑනේ. අපි එකක් හොයාගන්න එපා. ඉතින් අන්න එහෙම ස්ටෑන්ඩඩ් එක කියන ඔයාගේ කස්ටමර්ට දවස් 30ක් ගෙවා ගන්න බැරි නා ඩියු ඩේට් එකේ ඉඳලා. ඔයා කන්සිඩර් කරන්න මේක ඇවිල්ලා මොකක් කියලාද? significant increase in the credit risk කියලා. හරිද? that මේකට ලොකු කතාවක් තියෙනවා. I am not going to tell you about that. Movement from stage 2 to stage 3 is a model occurs when there is evidence of impairment. This includes breach of contract and significant financial difficulty of the borrowers. Right? So remember this credit risk. ඒක තමයි මම මෙතනදී කිව්වේ. credit risk එක කොටස් දෙකක් තියෙනවා. If it is not significantly increased, you can make the provision for 12 months expected credit loss. If it is increased significantly, you want to make lifetime expected credit. ඔයාලට මේ theoretical knowledge එක විතරක් ඔයාලගේ level එකේදී හොඳටම ඇති. Right? Because these are kind of complicated calculation when it comes to the practical scenarios. But remember ඔය terms ටික හොඳට මතක තියාගන්න. Initially you should make 12 months expected credit loss. Subsequently, or if there's any significant increase in the credit risk, you should make what? Lifetime expected credit loss for them. Understood? Right. So that is the basic theory that you want to keep it by. Indication of the credit impairment. Questionable areas, right? මේවත් standard එකේම තියෙනවා. You can highlight them. අපි කොහොමද මේ significantly increase වෙලා කියලා කියනවා. නැත්නම් credit impair වෙලා. එයාගේ significant නැත්නම් මේ මනුස්සයාට credit impaired වෙච්ච කෙනෙක්. නැත්නම් මෙයා out යන කෙනෙක් කියලා අපි දැනගන්නේ කොහොමද? මොනවද? Significant financial difficulties of issues of the borrower. අපි ඒ කියන්නේ අපි හිතමුකෝ bond එකක් issue කරලා තිනවා ගෙවා ගන්න බෑ දැන් මේ bond එක. Breach of contracts නේද? දැන් customer කෙනෙක් ඉන්නවා අපේ company loan එකක් අරගෙන rental 10ක් විතර ගෙවලා නැහැ. Breach of contract. That is an indication where you to identify that there is a credit impairment, right? The borrowers being granted concessions. නේ සමහර loans තියනවාද? ඒ loan මනුස්සයා කියනවා මේමයි මහත්තයා මට දැන් මේ loan එක ගෙවන්න බෑ. පුළුවන් නම් මට මේක අවුරුදු ගාන පොඩ්ඩක් තව වැඩි කරලා දෙන්න. rental එක අඩු කරලා දෙන්න. interest එක පොඩ්ඩක් මේ කපලා දාන්න. අන්න එහෙම කියනවා කියන්නේ that guy has some financial difficulties, right? The customer become bankrupt. So those are the impairment for the credit impairment, right? And I told you that when we making the provision, monkey were banks වල ගත්තත් නේද? මම ඔයාලට ඉස්සෙල්ලා කතාවක් කිව්වේ නේද? දැන් People's Bank, BOC, Sampath Bank, Commercial Bank ඊගොල්ලන්ට කොහොමද මේ හැම customer කෙනෙක් ගාවටම ගිහිල්ලා what is your contractual cash flows and what are your expected cash flows කියලා මැනේජර්ට කල්පනා කර කර හදන්න උන cash flows. It is not practical නේද? අන්න ඒ වගේ වෙලාවකදී we make individual impairment for the customers where we can identify directly and we make provision for the collective impairment නේද? individual impairment එකක් කියන්නේ දැන් අපි හිතමුකෝ බිලියන් ගාණක් ගත්ත කස්ටමර් කෙනෙක් ඉන්නවා නම් ඒගොල්ලෝ වෙනම ඉන්නයි. එයාට වෙනමම අපි කැල්කියුලේට් කරනවා. for others අනිත් ඔක්කොලාම අල්ලලා එක සමාන කස්ටමර්ස්ලා ඉන්නවනේ. දැන් උදාහරණයක් විදිහට අපි ගත්තොත් ෆිනෑන්ස් කම්පැනි එකකට පුළුවන් එයාගේ කස්ටමර්ස්ලා ක්ලස්ටර් කරන්න. how? කාර් ගත්ත කස්ටමර්ස්ලා වෙනම ගන්නවා. බයික් ගත්ත කස්ටමර්ස්ලා වෙනම ගන්නවා. because you know that කාර් එකක් ගන්න සාමාන්‍යයෙන් කියන්නේ ටිකක් ප්‍රොෆෙෂනල් ජොබ් එකක් කරන කෙනෙක්. බයික් එකක ගන්න සාමාන්‍යයෙන් අපි හිතමු ඉන්ටර්න්ෂිප්ස් වල ඉන්න අය නැත්තම් ට්‍රේනින් පීරියඩ්ස් වල ඉන්න අය එහෙම තියනවානේ. ට්‍රයි ෂෝ එකක් ඩ්‍රයිව් කරනවා නම් ඒක ඩිෆරන්ට් කල්චර් එකක්. වෑන් එකක යනවා නම් ඩිෆරන්ට්. බසස් යනවා නම් ඒක ඩිෆරන්ට් කල්චර්ස් නේද? ඒවා you can understand based on those homogeneous factors. We classify these kind of the clusters, groups, and we make provision as a collective team එකක් විදිහට මේගොල්ලන්ට provision එක කරනවා. So which we known as the individual impairment and the collective impairment, right? Look at this individual impairment. If an entity has reasonable and supportable information. නැත්නම් අපි කිව්වර එක customer කෙනෙක් ඉන්නවා 1 billion විතර loan එකක් දීපු. If you can initially clearly identify what are the loans or what are the cash flows that we have given to this particular customer. හරියටම මෙයාව recognize කරගන්න පුළුවන් නම් අන්න ඒ වගේ කෙනෙකුට without undue cost and effort. ඒකට ලොකුවට මහන්සි වෙන්නත් එපා. ඔයාට පුළුවන් නම් you can make the individual impairment based on his future cash flows. Now look at this. Bank has granted number of loans to their customers and out of that there are 20 corporate customers. ඒ කියන්නේ companies වලට loan දීලා තියෙනවා who have been given loans more than 100 millions. 20 customers ලා ඉන්නවා loan එක 100 million එකට වඩා වැඩි. For that purpose we can make specific provision against their outstanding balance. What do you mean by collective impairment? We'll read the example. Bank has granted number of loans to their customers and getting individual information relating to each customer is involved with material cost and the effort to the bank. Therefore, bank cannot estimate their future cash flows individually. For the entire amount, we can have a particular collective impairment. The මේවට තමයි අර මං කිව්වේ KPMG model, EY model, PwC models හදාගෙන තියෙනවා. මේ model එකකට client ගේ data ටික දැම්මම මේගොල්ලෝ කියනවා කොච්චරද probability එක එන්න ඕනේ කියලා probability එක calculate කරලා දෙනවා. අන්න ඒ වගේ model එකකින් තමයි collective impairment එක කරන්නේ. Okay, right. Okay, read this question number 14. We almost done the impairment. Very small part, then we are okay with the impairment part, right? Capital Trust is a company that has issued a public bond. අපි company එක issue කරලා තියෙන public bond එකක්. It reports to its shareholders on biannual basis. ASUS, a company which hold financial asset until maturity. Then ඔන්න එක client කෙනෙක් ඉන්න ASUS කියලා. That company has taken a particular bond from this capital trust company, and his intention is to keep this until maturity. So that means it's a amortized cost financial asset. On purchase, that is at the date of purchase, ASUS deemed the bond will have low credit risk due to the capital trust strong capacity to fulfill its short-term obligations. මේක ගත්ත දවසේ ASUS හිතනවා, right, okay, normally this the capital trust company can pay the short-term obligations, no? So I believe that there can't be any credit risk, so I'll give the money to them. It was perceived, however, the adverse changes in the economic environment could have a determinantal impact on the capital trust liquidity. Then environment ki change එකත් එක්ක, we'll say for an example like corona situation එකත් එක්ක වගේ ආවම then capital trust කියන company එකට full අවුල් ගිහිල්ලා යාලගේ business. At ASUS reporting date, it has assessed to the following information about the capital trust. Sales have declined 15% over the last 6 years. දැන් මොකද වෙලා තියෙන්නේ? Sales ටික හොඳටම අඩු වෙලාලු 15% වලින් last 6 months. We'll see. Okay. External agencies have reviewing its credit rating, but no changes have yet been made. Right? You can see that external credit rating. අපි හිතමුකෝ Fitch එක මේගොල්ලන්ට දීලා තියෙන credit rating එකක්, but triple B තාම triple B ම තමයි. Right? Although market bond prices have remained static, capital trust bond price has fallen dramatically. දැන් සාමාන්‍ය අනිත් companies issue කරපු මේ ඔය වගේ loans වල market prices ලොකු ගණන් වල හොඳට තියෙනවා, but මේගොල්ලන්ගේ එක drastically drop down වෙලා. දැන් අපෙන් අහනවා දැන් ASUS ගේ asset එක ASUS මොකද කරන්න ඕනේ? ASUS should recognize this as a significant increase in the credit risk. We learn what are the factors that causes to the significant increase in the credit risk. So here I would say you can identify that there is a significant increase in the credit risk from the inception. The reason is, if you look at this first point, sales has dropped down, but ඔයාට පොඩි doubt එකක් එනවා මෙන්න මේ point එකේදී. මොකක්ද ඔයාට එන doubt එක? ඔයා හිතනවා right, credit rating එක අඩු වෙලා නැහැ නේ, ඒ කියන්නේ significant increase in credit risk නෙමෙයි වෙන්නේ නැති. එහෙම හිතනවා. No, that is not the only fact you want to compare. Look at this, the third one, it is very strong factor, right? Although market bond prices have remained static, අනිත් bonds ගත්තොත් ඒ වගේ market price හොඳට තියෙනවා, but drastically the capital trust bond prices has reduced. අඩු වෙලා, ඒ කියන්නේ දැන් capital price වලට තියෙන demand එක අඩු වෙගෙන යනවා. ඒ කියන්නේ මිනිස්සු දන්නවා මේ කම්පැනිට ණය දුන්නොත් ගන්න බැරි වෙයි කියලා. Which means there is an indication of the increment of the credit risk. Right? So you can conclude that there is an increment in the credit risk. Right? So remember, I told you that I have given this credit rating example just as an example, but all the time don't apply that example to all the circumstances and come to the wrong conclusion that there is a significant increase in the credit risk. Right? Remember that. Okay, using the available, I will read the answer. You can note it down. Note down these answers, right? Because these are essential, but since it's time consuming, I am not reading the answer since we have the digital devices with us while we are spending our time in the class. Using available information, ASUS needs to assess whether the credit risk on the bond has increased significantly since inception. It would seem that capital trust performance has declined, and this may have impact on the liquidity. මොකද දන්නවද? sales උත් අඩු වුණාට පස්සේ sales අඩු වෙනවා කියලා කියන්නේ මිනිස්සුගේ profit අඩු වෙනවා. ඒතකොට ගෙවා ගන්න තියෙන එක අඩු වෙනවා. The review of capital trust credit rating by external agencies is suggestive of wider concern about the performance and the position of the capital trust. The fact that market bond prices are static suggests that the decline in the capital trust bond price is entity specific. Something wrong with this entity. This is likely to be response to the capital trust has increased the risk. Based on the above, it would seem that the credit risk of the bond is no longer low. As a result, it can be concluded that credit risk has increased significantly. So you should not limit only for the 12 months expected credit loss. Now you should increase your credit loss to the lifetime expected loss. අන්න ඒ වගේ answer එකක් ලියා ගන්න වගේ knowledge එක තිබුණා, it's more than enough at your stage, right? Okay, and we'll come to the yes, another important point is interest income. How you should recognize the interest income, right? Of the provisions there, based on the credit risks. I am asking, it's not individual impairment and the collective impairment. At inception anyway, we are recognizing a provision called what? At inception, we make a provision for all the financial or the amortized cost financial asset. At the inception, irrespective of whether the credit risk has increased or not, we make a provision. What we call to that provision? When we grant a loan, initially we make a provision, and that day itself we call that as what? 12 months expected credit loss. That impairment, right? Okay. If there's a significant increase in the credit risk, what we do? We make what sort of a provision?
Lifetime expected credit
loss, right? Those are two types of credit loss. Now standard says, look at this when it comes to this interest income recognition on the credit impaired assets, right? You can standard එක මෙහෙම කියනවා. The credit risk can be divided into two things now. If it is not increased significantly and if it is increased significantly. If it is not significantly increased, we make call this as the 12 months expected credit loss. Where it is if it is increased significantly, we call the lifetime expected credit loss. Standards say if your financial asset has 12 months expected credit loss, you can recognize the interest income on the gross carrying amount. That is excluding the loss allowance, right? Shall we go to this example? Okay, shall we go to this example? ඔයාලට මතකයි නේද මේ අර නාවල් කියන question එකටනේ අපි හැදුවේ මේ provision එක අපි ගත්ත මෙතනදී how much is the ECL අපි මෙතන calculate කරා expected credit loss එක කොච්චරක් වෙනවද කියලා. We took the years, right? These are the number of years, and we were at the end of the first year. අපි මෙන්න මේ හරිය තමයි හිටියේ. We were at the end of the first year. එතකොට when we were at the end of the first year, we knew that in the second year we are not going to receive this 100,000. Also in third year we are not going to receive this cash. Plus also in the second year we are going to receive only 50% of this 1 million cash flow. So we receive only 500,000 from that, right? 500,000. Then what we did, using the original effective interest rate, we got the present value, which was 10%. So we get this discount. We got the present value of this cash flow, which was how much was the present value of these cash flows came? Hope you can remember this example. It is 586,777, and we identify the probability of having this was 0.5%, right? So how much is that then? 586,777 into 0.5%, 0.5%, which was 2,934. හරිද? දැන් එතකොට ඔන්න අපි මෙහෙමනේ හිටියේ. දැන් ඔන්න අපි financial statement එක ගත්තොත් අපිට මේක financial statement එකේ මෙහෙම පෙන්නන්න පුළුවන්. කොහොමද? Now this is our asset account, right? This is our asset account. Okay, here this is our asset account. This is our asset account. We'll say this is amortized cost asset account. So we have this amortized cost asset account. right? So initially we invest 1 million, so you credit your cash book and debit here 1 million, right? Then we recognize the interest income. How we recognize the interest income? On the effective interest rate. So interest income credit, and here you can debit interest income. How much it is? 100,000. So you debit the asset account and you credit the interest income account. Then what happened? The first year we receive cash 100,000. So interest received. Interest received is also how much? 100,000. Interest received is 100,000. So we know amortized cost at the end of the period is how much? Amortized cost at the end of the period is 1 million again. The reason is, in this example, both right? In this example, both 1 million. The reason is both effective interest rate as well as the nominal interest rate are same. So we call we have asset of 1 million. Now we calculate. Now we are at the end of the first year. No, me 1 million කියන්නේ මේ පළවෙනි අවුරුද්දේ අන්තිමට නේද? පළවෙනි අවුරුද්දේ අන්තිමටමනේ. දැන් අපි මේ දවසේ තමයි මොකක් කරේද? මේ impairment එක කරලා බලනකොට අපිට ආව impairment එකක් 2934. 2934. ඒකට අපි කොහොමද double entry දාන්නේ? අපි double entry එක දානකොට double entry දාන්න ඕනේ. We debit P&L this amount because impairment is an expense now. We debit 2934 as expense to the P&L. We can credit if we want this amortized cost asset account. We can credit this amortized cost asset account if we want 2934. කියන්නේ මෙතනින්ම ඔයාට පුළුවන් provision impairment කියලා අඩු කරලත් මේක පෙන්නන්න. impairment කියලා මේක අඩු කරලා පෙන්නන්නත් පුළුවන්. ඒතකොට ඇත්තට අපේ asset එකේ value එක කීයක් වෙනවද? ඇත්තටම අපේ asset එකේ value එක. අපේ asset එකේ value එක වෙන්නේ එතකොට 1 million minus this 2934. 997066. දැන් හරිනම් අපේ දැන් අපි කිව්වොත් මෙතනට අපි impairment එක දැම්මා කියන්නකෝ. මෙතනට අපි impairment එක දානවා. We take this impairment. එතකොට impairment එක දැම්මට පස්සේ අපේ value එක එනවා කොච්චරද? 9997.66. එයානේ opening balance එක වෙන්න ඕන ඊළඟ අවුරුද්දේ. right? Technically මම මේක මෙතනට දාගත්තොත් ඊළඟ අවුරුද්දේ මගේ interest income එක වෙන්න ඕනේ 99707. Clear? But standard C, if this 2934 is your 12 months expected credit loss, if this is your 12-month ECL, you can keep continue this gross carrying amount when you recognizing the interest. Understood? මෙහෙම ගන්න එපාලු interest එක. මේක 12 months නේ. එයාව ගණන් ගන්න එපා. ඔයා gross carrying amount එකටම 100,000 interest එක recognize කරගෙන යන්න. That's what this says in this slide. First one, interest income. If you have provide 12 months expected credit loss, interest income is recognized on the assets gross carrying amount. That is excluding the loss allowance. මේක ගැන හිතන්න එපාලු. මෙන්න මේ 2934 කියලා කියන්නේ 12 month expected credit loss නම් බය වෙන්න එපා. මෙයාගේ මෙන්න මේ loss allowance එක charge කරාට කමන්නේ asset එකට. but interest එක recognize කරද්දී gross එකටම recognize කරන්න. That is ignoring this provision. Right? Standard also say if this is lifetime expected credit loss, ඒ කියන්නේ මෙන්න මේක lifetime expected credit loss එක නම් 12 months expected credit loss එක නෙමෙයි. Right? This is not the 12-month expected credit loss. Right? I'll take it like this. It's very easy for, if it, this is not the 12 months expected credit loss, this is lifetime, right? This is called the lifetime expected credit loss, ECL. If this is the lifetime expected credit loss, no chance you want to recognize the interest income on this net carrying value, that is after considering this provision. If this is expected lifetime expected credit loss, right? That's what it says. Interest income is recognized on the assets net carrying amount, that is after the loss allowance. Clear that part? Right. Okay, look at this question number 15. On 1st February 2018, JCM made 4-year loan of 10,000. On 1st February 2018, JCM made a 4-year loan of 10,000 to LCL. Loan එක දීලා තියෙන්නේ LCL එකට. Right? The compound, the coupon rate of interest, right? The coupon rate on the loan is 6%. The same as the effective interest rate of the interest. Coupon rate එකත් 6% ලු, effective interest rate එකත් 6%. එහෙනම් loan එක 10,000 නම් loan එකේ closing value එක කීයද? 10,000 ම තමයි. That we know. Interest is received at the end of the year. On 1st February 2021, that is after 19, 20, 21, 3 years, neither. Yes. LCL tells JMC that it is in significant financial difficulties. හරි, දැන් loan එක දීලා තියෙන්නේ කාටද? LCL එකටනේ. එතකොට JCM ගේ පැත්තෙන් ගත්තොත් ඒක asset එකක්. LCL කියනවා දැන් නම් පොඩ්ඩක් මේක ගෙවා ගන්න අමාරුයි. At this time, current market interest rate is 8%. ඔන්න ඔයාලව පටලන තැන් දැක්කද මේ? And this time, current market interest rate is 8%. JCM estimates that it will receive no more interest from LCL. එයා හිතනවා sure මට මේක LCL එකකින් නම් සල්ලි හම්බෙන්නේ නෑ. It also estimates that only 6,000 of capital will be repaid on the redemption date. JCM has already recognized a loss allowance of 1,000 in respect of the its loan to LCL. දැනටත් එයාගේ provision එකක් තියෙනවා, 12 months එක තියෙනවා දැනට. How should this be accounted for? Okay, tell me the answer. I think you should try this, otherwise වැඩක් නෑ, right? 1st February 2018, now they have given this loan. So you can see now on 1st February 2018 they have given finance income is 6% and also receipt 6%. The closing balance is also the 10,000 there. 1st February 2018, now they have given the loan. The first year end on 31st January, yes, 31st January 2019. Then 31st January 2020, and this is 31st January 2020. 18, 19, 20, 21, and it is a 22, 4 years because this is a 4-year loan, right? So at any time you can see this is 10,000, right? Now on 1st February 2021, that is as of this date, 1st February of 2021, JCM LCL tell that JCM is in a significant difficulty. In the මතක තියාගන්න, at this time එකන දැන් මගේ carrying value එක තියෙනවා 10,000. Already I have a loss allowance making the financial statement of 1,000. This is 12 months expected credit loss. On this point, I know that I am not going to receive the balance cash, right? What is the balance cash in the sense? Because the coupon interest and the effective rates are the same, the carrying amount of the asset will remain constant at 10,000. The present value of the future cash flows discounted using the original effective interest rate is 5,660. That is 6,000 divided by 1.06. හොඳට මතක තියාගන්න මෙතනත් I want to use the original effective interest rate of 6. Right? Original effective rate of 6. Remember, the question is giving you what is the current market rate. Or make a use කරොත් එහෙම discount කරන්න, which is wrong. So always you want to use the original effective interest rate. Right? So I know that I am not going to receive, it is also estimated that, right? estimate that it will receive no more interest from LCL. So I am not going to receive this the last year interest plus I am not going to receive this 6,000 also. Sorry, only 6,000 out of this. එකනේ මට හම්බෙන්නේ 6,000. It is also estimated that only 6,000 of the capital will be paid. හරි capital එකෙන් මට හම්බෙන්නේ 6,000 විතරයි. ඒතකොට ඔයාට මෙහෙමනේ ගන්න වෙන්නේ. right අපි දැන් වලට use කරපු method එක විදියට ගත්තොත් එහෙම what are the future cash flows that we going to receive is this නේද? මෙහෙමනේ වෙන්නේ. තව එක year එකයි තියෙන්නේ. I am not going to receive 600 plus I am not going to receive 600 plus I am not going to receive 4,000. These are the cash which I am not going to receive, isn't it? ඒ කියන්නේ තව අවුරුද්දකින් නේ 1 year එකකින් මට හම්බෙන්නේ නැහැ මොනවද? 600 හම්බෙන්නෙත් නැහැ 4,000 හම්බෙන්නෙත් නැහැ. Look at the question again. Question එක බැලුවොත් ඔයාලට පෙයි. See current interest rate JCM estimate that it will be received no more interest from LCL. It also estimate only 6,000 of capital will be repaid. That means 4,000 I am not going to receive. The effective original rate, the rate of interest is 1.06%, right? Is it 1.06? That means I am not going to receive 4,340. I am not going to receive 4,340. එක අනිත් පැත්තට හදන්නත් පුළුවන්. හම්බෙන cash flow එක අරගෙන 10,000 වලින් අඩු කරත් පුළුවන්. මේ 4,340 the same answer. If you familiar with this way, these are the cash flows which not going to receive. මේ එතන යා කරලා තියෙන හම්බෙන ටිකින් 10,000 අඩු කරලා balance part එක අරගෙන. Either way, right? So expected loss should be 4,340 because the question does not specify the probability of having. They are saying that there's 100% probability not to receive this. So I should make a provision which is equal to 4,340. Already I have done 1,000. I have already done 1,000 12 months expected credit loss. Now it seems that there's a significant increase in the credit loss. Why? The reason is I am not going to pay. Yeah, කියනවා LCL කියනවා මට විතර පස්සේ ගෙවන්න බෑ. That means it's going to seems to be like bankrupt. That means you should make lifetime expected credit loss. So after you recognize that, you should recognize the interest income on which value the net income, that is after deducting this 4,340 you should recognize the interest income not 600, you should recognize the interest income 340, that is 10,000 minus this credit loss of 4,340 into 6% original effective interest rate. That is how you want to recognize the interest after or you make in the lifetime expected credit loss, right? And this is important because this is the last topic under this impairment. Then we done with the impairment. That's what I told, right? This financial instrument standard is little bit complicated. You should have a good knowledge. You should have good prior knowledge in order to identify everything clearly. That's what I am doing this lesson at the latter part of your syllabus. Plus, here we did it over 2 weeks, isn't it? Because it's that much complicated. Those kind of things have been tested in your exam. Complicated areas, right? Okay. This is the last area under impairment. We'll try to finish the lesson anyway today because there's only one topic called the derivative. There I am not going to do much. Very simple part. Then we done. Otherwise, I have to use another day to do the financial instrument. So I don't have that much of days also to spend with you all. So what I thought was to finish today itself. We'll take small 5 minutes break and come back and we'll finish the derivative part and finish it. Right? That won't take half an hour's time. Okay. So simplified approach to the trade receivable. Now I told that when you're working as the accountant in your organization, you can apply particular small statistical model to your trade receivable because we learned trade receivable is also now considered as the amortized cost. You are not going to make provision for doubtful debt. Now we are making impairment for the trade receivables. So remember, trade receivables we know that we arising when we make a sale, right? So we should make a provision or a loss amount which is measured at the lifetime expected credit loss at the initial recognition. Right? This is generally the same as the 12 months credit loss as the maturity of these assets in 1 year sort of this thing. අවුරුද්දට වඩා අඩු වගේ කාලයක් නේ තියෙන්නේ මේවට. ඒතර අපි මේකට හරියට lifetime expected credit loss වගේම තමයි දාන්නේ. Right? General approach to credit loss explained above. Entity may choose adopt simplified approach when calculating expected credit loss for the trade receivable. This involves the use of provision matrix පොඩි calculation එකක් use කරනවා in which trade receivable with different historical loss patterns are grouped. Right? The best option is we can classify the trade receivable like this way. කොහොමද අපි classify කරන්නේ? අපි age analysis එකක් ගන්නවා trade debtors like. Right? age analysis එක ගන්නවා 1 to 30 days past due ඉන්න අය ඉන්නේ. ඒ කියන්නේ දවස් 30ක් ඇතුළත ගෙවලා නැති අය. 31 to 60 days. 61 to 90 days. Over 90 past dues. අන්න ඒ වගේ අපි age analysis normally from the system you can take this. And we calculate how much is the expected default. මේ category එකේ කෙනෙක් දැන් කියන්නේ current කියලා කියන්නේ no areas. ඒ කියන්නේ අද විකුණපු අය. current. Right? 1 to 30 past due dates කියලා කියන්නේ past due date එක පැනලා දවස් 30ක් ගිහපු අය. due date එක පැනලා දවස් 30ක් ගිහපු අය. හරිද? due date එක කියන්නේ අපි හිතමුකෝ දැන් ඔන්න මම carefully listen now. I am giving or I am selling goods on credit terms. අපි හිතමුකෝ credit terms වලින් goods විකුණනකොට මම කියනවා right. ඔයාලට මම මාසයක් දෙන්නම් මාසෙක පස්සේ ගෙවන්න ඕනේ කියලා. So how what is his credit period? 1 month. Due date is not today, due date is after 30 days. So what here says is 1 to 30 days past due. එක due date එකේ ඉඳලා තව දවස් 30ක් ගියපු අය. ඒ කියන්නේ total 60 days විතර ගියපු අය තමයි මේ 1 to 30 category. නැත්නම් මේ අද දීලා දවස් 30න් ගෙවපු නැති අය නෙමෙයි. Normally we give them a credit period නේ. According to that credit period they are supposed to pay on the 30th day. But if they are not going to pay on the 30th date, from that day onwards there are past due people 1 to 30 days. ඒ කියන්නේ දැන් අපි හිතමු ජනවාරි 1 වෙනිදා තමයි විකුණන්නේ. එහෙනම් සාමාන්‍යයෙන් ජනවාරි 31 වෙනිදා ගෙවන්න ඕනේ. මෙයා ගෙවන්නේ පෙබරවාරි 28 වෙනකන් ගෙවලත් නැහැ. ඒ කියන්නේ due date එකේ ඉඳලා 1 month ගිහිල්ලා. So those kind of people are in this 1 to 30 days past due. The expected default rate is 1.5. ඒ කියන්නේ මේගොල්ලෝ past data වලින් තමයි පුතා මේව recognize කරගන්නේ. past data අරගෙන බලනවා right. ඒ කියන්නේ සාමාන්‍යයෙන් current bucket එකේ ඉන්න කෙනෙක් default end තියෙන percentage එක 1%. Based on the past data you can calculate. From 1 to 30 default rate is 1.5. 30 to 62 3.2. 61 to 90 days ගියපු කෙනෙක් ගෙවන්න නැති වෙන්න තියෙන probability එක 5%. Over 90 days it's 13.2%. These of course you can classify or calculate based on your past experience, and you take what is your carrying amount or what is your outstanding balance multiplied by this provision. So that's how you make a credit loss allowance in the financial statement. Simplified method. So you can apply this into your business also, right? Okay. So technically you make a provision of 16,000. Okay. So this is one of your past paper question, right? So yes, Locksley trade receivables are short-term and do not contain a significant financial component. Using historical observed default rates uploaded for changes in the forward-looking estimate, Locksley estimates the following default rate for its trade receivable that are outstanding as of 31st March 2021. Default rate is, if it is no overdue, default rate is 0.5. ඒ කියන්නේ overdue වෙන්නේ නැති කෙනෙක් default වෙන්න තියෙන probability එක 0.5%. 1 to 30 days it's 1.5, 31 to 60 it's 6.1, and if it is over 61 days it's 16.5. Trade receivable of Locksley as at 31st March 2021, you have been given the gross amount. Not overdue amounts is 10.1, 1 to 30 days overdue 4.3, 31 to 60 days overdue is 1.6, 61 days overdue is 1. There is a loss allowance brought forward from previous financial years 0.2 million in respect of the trade receivable. The directors of Locksley require advice how to calculate and account for the current year's loss allowance. Required. Respond to the director's request. So technically it's very easy. What you want to do? You want to apply the provision like this. Now, so here just we have I have given you the the basics of the theoretical parts, right? What I want to tell you is here, not overdue 10.1 into the default rate, and 1 to 30 4.3 into default rate, 31 to 60 days 1.6 into 6.1 default rate. Likewise, you can calculate how much is the provision. Already they have make a provision of 0.2, required is 0.3, the balance 1.8 you can charge to the P&L as an expense, right? If you want, you can quickly take a picture of this, and later on you can write it down. There's a similar kind of a question in your past papers also. We'll do that later, right? So this is how you want to make the provision in the financial statement. Especially for this trade receivable, we applied very simple method to calculate this thing.